Hi there, traders. This is Brad Gilbert with today's trading action. All right, let's just keep this short and sweet. We are starting to see the US dollar start to run. Now, if you had been listening to what I was saying during the week, I just had a clear gut feeling that the markets were now ready to start firing. And that's what I mean. Let the dollar go lower. It's like the market gave up on the US dollar falling and now it kicks into gear. But you know what? It's the fourth week of the month. There isn't a lot of data coming out. And usually it's a left field event. And this is what it is. The Chinese government, right, they have come out with this massive package of coordinated monetary and liquidity stimulus, right? Huge. Cut the reserve ratio for the banks by 0.5% and injecting a huge amount of cash and all sorts of stuff. So that's going to really get the Aussie and Kiwi moving topside. Now, the thing is, interest rates in New Zealand and Australia are already high, right? So you've got a good interest rate differential there. So Euro's starting to run, right, on the daily charts. You look, well, let me just actually come back to the dailies. I'm on the wrong one because we are starting to see a good opportunity here, and it comes with today's data, right? You got Euro, Sterling going higher, Aussie just thinking about it, right? And the dollar is basically going down against everything else. Like a good uniform. This is the start of a nice trend. It looks like it, okay? And that's what we're looking at. So what am I talking about here? The Aussie hasn't gone yet. And today we have Aussie CPI numbers, right? So keep an eye on this weighted, it's the monthly indicator. So, but that's all we've got to work with, right? 2.7 expected, the range 2.3 to 3.4. Ideally, we want a number, well, to go with this current move, we want a number above up above 2.7, up towards 3.4 would put the cat amongst the pigeons. Aussie would be screaming topside. But you know what? The central bank is on hold. That's the no-brainer trade. A high inflation print gets Aussie moving higher very quickly. If it comes out weaker, right, and below 2.7, say down to below 2.3, it's going to diffuse the move, right, somewhat. Now, outside of that, you look at the global markets, we have it like a risk-on profile in play. NASDAQ shooting topside, Dow Jones Mini a little bit down, but that's where it is. The US Treasury yields have really found a home, right? They're a little bit lower, and that gives us that risk-on profile. Euro, Sterling, Aussie, Kiwi up, dollar down, Bob's your uncle, Fanny's your aunt. Now, risk on, risk off, you can see very clearly here that there's a risk-on profile. And the safe havens, the yen and Swiss gold, right? Well, they're piling into those as well. So keep an eye on things. Everything's moving. We've got a good trading opportunity. Just look for to get into the trend if you can. There's nothing really, if I just scroll down through the calendar here, really coming out that's going to upset the apple cart just for the moment, right? We've got the Swiss National Bank tomorrow talking about interest rates. We'll see how that goes. But outside of that, you just got the normal US numbers. Fourth week of the month, we start to see the trends move, and that's what we're seeing just at the moment. All right, guys, have a good one. All the best. Cheerio.